Most traders get bias right, but they lose money because they enter in the wrong place. Let me show you exactly where to enter using the same weekly candle strategy. In the last video, I showed you why you only need one weekly candle to define bias. Nothing changes here. Same candle, same logic. The mistake most traders make is they jump into trades inside the noise instead of letting price show its hand first. Here's how the weekly candle actually behaves. The high and the low of the previous week act like liquidity magnets. Price either fails to displace this level where we get a reversal, or it displaces past this level where we get a continuation. That reaction tells you the direction, not the entry. Step number 1, mark the weekly highs and lows. Step number 1 is simple. Mark out last week's high and low. That's it. Step number 2, wait for the sweep or failure to displace pattern. Do nothing until price reacts at this level. You want to see a sweep or a failure to displace pattern at this level. Most false moves happen before this. SMCX highlights sweeps in real time, which makes this part mechanical. Step number 3, enter on the CISD, drop down to the execution time frame, either the 15-minute, the 5-minute, or the 1 hour. My entry is simple, either the break of the CISD or the inversion of the fair value gap. That's the trigger. There's no guessing. Let me take you onto the charts and show you exactly how this works. Here I am on the charts and I'm on the weekly time frame. So what you want to do is mark out the highs and lows of the weekly candle. Once you've got that done, then you jump into a higher time frame. After I mark up my highs and lows on the weekly time frame, I like to drop down to the 4-hour time frame. This allows you to observe the sweep pattern correctly. All you want to see now is you want to see price come to the level. So I'm basically just waiting for price to come to this level. When it comes to this level, I want to see a failure to displace pattern. So we wait for price to come to this level, we wait for it to come to this level, and there you go. This is what a failure to displace pattern looks like. You can see price has swept the previous week's high, and then we're getting a 4-hour failure to displace pattern. This is a strong reversal signal, and this is what we want to see at this weekly high. Once we see this failure to displace pattern, we wait for the candle closure and then we can jump into our entry time frame. I like to enter on the 15-minute chart. So here I am on the 15-minute and you can see we get the sweep occurring over here. At this point, all we need to do now is mark out the CISD level. And this is the CISD right over here. The CISD is the candle or series of candles that creates the sweep. So you can see this is the candle or series of candles here that creates the sweep of this high. So we want to go to the base of that level. And this becomes our all-important level that we want to see broken before we look for an entry. Now all you need to do simply is wait for price to break this level. If we get a candle closure below this level, there we go. So this is a confirmed break and closure of the CISD. This is where we look for our entry. Stop loss goes above the swing highs. If indeed this is a true manipulation point, then price will not retrace past that level. That is why we want to place our stop losses above the previous swing high, and then we can target the lower liquidity areas. So it all depends on your tolerance for risk and how long you like to hold the trades, but we could target these lower liquidity areas over here. That could be one option. We could target these lows as well. We could target these lows as well. That could be another option. Or you could simply target the weekly candle lows, which is this level right over here. So let us now play this out. If you set your take profit over here, you would have been successfully out of the trade. Otherwise, you would have taken partial profits at that point. If you kept it going, then we would have waited for price to come to the lower liquidity. Remember, the weekly high and the weekly low are magnetic levels, and price loves to take out the highs and the lows because this is where the liquidity is resting. So we can see this is taking a little bit longer to come down. Price finally tapped in and took out the lows as well. The main focus of this video today was to be able to show you exactly how to enter. So the key to this strategy is when price arrives at the weekly high, you want to see a sweep of that level. Once that level gets swept, you want to see a break of the CISD. Once the CISD gets broken, then you can simply enter. So you can see this would be the sweep level. See, price sweeps that level. Then this is the area where the CISD is located. Then we mark out the CISD. Then all you want to see is price break the CISD. A lot of times it will break and it will retrace back to that level, and then we'll continue to the downside. But this is the exact entry model you want to see. When price comes to these key levels, this is what you want to see. This is exactly why I built my workflow around SMCX. It removes the manual work so I can focus on execution. If you want the indicator I'm using, the link is below. If you want a deeper dive into understanding entries, make sure to watch this next video right now. Click the link now to master your entries.